All right, let's bring in our next guest analyst, and we'll get to some of those other things in a second here because I know we've got a big number coming with the jobs number. I don't know, Craig, if you have it in front of you, but we do have a jobs number. Would you happen to have it?
I do. Hey, jobs numbers just got released. And listen, this is a good print. Whether AI is friend or foe, it is clearly still friend. We've got 172,000 jobs coming out for the non-farm payrolls. That's 172,000 created versus an estimate of only 80. We're keeping a headline unemployment rate of 4.3. So that's going to support the view that the U.S. economy is stronger than consensus believes, but it also clearly takes any hope for Fed rate cuts squarely off the table for full year 2026.
Yeah, we will have the first Fed meeting next week. He's probably just going to get his feet wet and just have a little bit of a chat with the room. I don't expect anything to change, but you're right. That's a big number. 80. I think we had 80 to 85 expected, so it's more than double. So you're right. That means the economy is doing well. Now all we have to do is have the Fed help us with this inflation issue, and I think that's largely due to the fact that we've been meddling with Iran, and at some point in time, somewhere soon, we'll probably get that under control, and away we go.
Yeah, away we could go. We absolutely need to get that inflation under control. I can't stress enough, Scott. Everybody knows, but I'm going to re-stress it. These oil prices have to come down before they become permanently embedded in other parts of the U.S. economy. It's not just the price at the pump. You're going to see producers all across our distribution and ecosystem begin to embed those higher costs as people who are hedging, their hedges roll off and expire, hedging relative to the higher oil prices. So this is a real concern. There's some time decay. We've talked about 100 days being so incredibly important. And last time I checked, the 4th of July is just around the corner. That's the benchmark and the bogey to get some progress. I'm not sure what's happening here. I think Iran thinks they're doing okay. They're not doing okay. They need to get their stuff together. So I'll leave it there.
That's good. I like that bogey comment. I want to talk to you about something else. We're seeing big tech come under a little pressure. The narrative is that we've seen some people sell some of their high flyers because they want to get involved with the SpaceX IPO next week. How much credence do you give to that story?
Well, I think there's a real danger. There's a subtle danger coming into that IPO next Friday of SpaceX. Number one, I think you could have some rotation. There could be rotation out of Tesla stock, believe it or not, to free up cash to go into SpaceX. There could be rotation coming from other core components of the Mag 7 to chase the SpaceX IPO. And my reminder to everybody is if you're even thinking about participating in the IPO, remember, there's a big difference between a market order and a limit order, because I'm afraid with only 5% of the float coming public, this thing is going to be so incredibly oversubscribed, 135 on the initial offering price. What if this thing trades at 270 or 300? People who place market orders might not even have the cash to fill those at the end of the day. So buyers beware. You better have a discipline and a system, but lots of changes at hand.
Yeah, not to pop the bubble. I'm excited about it, and I'm hoping that Tesla gets rolled into it. So maybe it's not a good idea to sell Tesla. I own Tesla. I was thinking about getting, if it does get cheaper because of what you just said, I might want to buy some more. I ultimately think he'll fold them together, but that's a whole nother show and a whole nother day. What I do want to talk about is it's one of the big three that's going public, and we talk about IPOs just so the viewers and listeners know. IPO means initial public offering. That's when firms like SpaceX come to the market to sell parts of their company to raise some capital so they can continue with their business operations. All right. The valuation at 135 bucks a share, I think, is $1.8 trillion when it comes to SpaceX. That's big, number one. Number two is we have two more coming up. We've got Anthropic and OpenAI. They're going to be coming this fall, October, and then maybe the last quarter here. But if you put all three of those together, last year they lost combined $25 billion. Now, that smells more like 2001 than 2026. What are your thoughts there?
Well, I think it smells more like March 10th of 2000, not so much 2001. You're right, Scott, hearkening back to the dot-com bubble with your comments. But, I talked about this on another program, and I'm looking at the PEs. And the price to earnings ratios of the largest companies in the S&P 500 today, they're not trading at 120 or 64. They're trading, like, look at Nvidia. It trades at 22. Those companies do make real money. Yes, it's true.
Yeah.
Anthropic, OpenAI, SpaceX, the multiple you're paying on revenue, the multiple on revenue, forget earnings, just revenue is absolutely insane. But sometimes companies grow into their revenue. Sometimes companies that are that
Ah.
disruptive and that
Ah.
transformative get there. And AI could be the piece. I think the big story, the inclusion of these in stock indices sooner than normal. I think that's a very watershed important moment to take a look at. But there is going to be some rotation as people free up cash and capital. But buyers beware Friday the 12th.
Couldn't agree with you more. The last thing I'm going to say is a little bit, it's ominous. It's also very kind of a big thought, but Anthropic, one of those three that we just mentioned that's going to be coming to the market for public money last quarter of the year. They put out, there was an article, I think in the Wall Street Journal this morning or yesterday about how they believe that we should probably put the brakes on AI development globally to kind of get our heads around what's been happening, because they believe we're on the cusp of some of this artificial intelligence able to program itself, almost self-learning. And they're kind of worried about it after what we saw happen with that Mythos issue when that went rogue, and Scott Bessent brought in all the tops of the big bankers in the country for a meeting. What do you think about the worry here that we're getting close to a point where artificial intelligence can teach itself?
Well, Scott, what you just said, wait, my phone's ringing. It's Sarah Connor, if you remember her. Shout out to the Terminator in that great
Yes.
James Cameron movie, right? No, that would be incredibly worrisome if AI becomes self-learning, becomes effectively self-aware. I don't even have a response to you. Here's what I do know. I want America to be the leader in AI. And that means I want America to be
Absolutely.
the leader in data centers, the leader in semiconductors, and thank heavens we have energy independence, because all three of those are needed in order to achieve such. Strong governance, sure, I want it. Big talk, harder to execute. As far as awareness goes, let's hope Sarah Connor doesn't come back into play.
Right. Well, and we'll end it on this. I am concerned about AI learning, how to learn itself. That can be a concern. But my biggest concern is that they'll be able to read your mind, and if that happens, I'm going to jail. So I got to be careful about that. Hopefully that day never comes. I appreciate you coming on the show, Craig. Craig Bolanos, he's the co-founder and wealth partner at VestGen Wealth Advisors in Chicago. Thanks for being on the show, Craig. We'll see you again